Nirmal, good morning. Thank you for joining us. What do you make of last week's price action?
I think what we saw in the global markets, Nikunj, is a clear indicator that the markets are liquidity driven more than fundamental driven. I think what is happening in Japan is a clear-cut example that the Japanese government is overburdened with debt. The dependence is too much on the stimulus part, and if somewhere, if Ben Bernanke decides to switch off the taps, it could be problems for the global equity markets, and Japan could be a major victim of it. So somewhere with inflation possibly showing signs of going up as far as Japan goes because the stimulus being put into by the present government, I think ultimately the markets will give a tight slap to such type of events. But honestly, I don't think there is too much to worry, at least as of now, till the time the employment data in the US shows signs of improving. But the risk will always be that the yields will go up, suddenly we'll have sharp falls here and there. But coming to India specific, Nikunj, if you ask me, I always believe that basically the markets are consumers, purveyors of the data. And unless and until this data goes for the worse, I don't think there are any reasons for people like the stock market men to be a little bit bearish on India. I don't see there are any reasons for people to be thinking too negative for India unless the data which is there in front of us turns for the worse. Because somewhere I feel we are at the cusp of a very major economic revival. We are in early days right now, but at least we are there.
Let me give you some negative data. On Friday, foreign institutional investors have turned net sellers. Numbers from L&T were bad. State Bank of India management commentary was very poor. And if I look at the consensus report or the earnings scorecard for FY14, nobody is pricing in a big uptick.
Nikunj, I think we need to accept the fact that starting January, February, I think I was stating that we are possibly now going to see the macros improving and the markets will give a thumbs up to that. Post the budget, I think the markets came down very sharply, but I was quite confident this will happen. And I personally feel the markets have rewarded the improving macros. Now, what you are saying is dead right. Whether this macros will ultimately translate into things improving at the ground level, and that is basically a risk factor. But I feel somewhere along the line it's going to happen. In the interim period, global events here and there a little bit, or maybe if we don't get improving numbers. When I'm saying improving numbers, I'm referring to numbers as far as cement sales goes, auto sales goes, IIP numbers goes. If they show signs of improving, if we have a decent monsoon, if there is an interest rate cut coming in June, for all you know, Nikunj will be talking of much higher levels or seeing much higher levels in the next 1-2 months. There are a lot of ifs. I'm not disputing it. But what I'm trying to state is, this is not a market in which one can say over the next 2 months we are going to head higher. If events happen, of course, we'll head higher. But at the end of it all, what I'm trying to state is one fine day, maybe 1, 2, 3, 4 quarters later, I think we could have reasons to believe that, oh, this was an opportunity for us to buy. It was improving macros coupled with things improving on the ground level, which I hope and I feel will happen with a little bit of a time lag effect.
Nirmal, since you do believe that this is a right time and opportunity to start nibbling into stocks that you've always wanted, given the fall that some of these names have seen, what is it that you're recommending to your clients?
I think I have been positive for quite some time, and we are absolutely there for the private sector banks. And I think there are only 3 names which we are looking at as HDFC Bank, IndusInd Bank and HDFC. I think besides that, I personally feel that the investor should not bother to look for 4th and 5th and 6th name, because if you're going to put 10% of your money into banks, I personally feel for the entire 10% should go into private sector banks, because I've been a strong believer that in the banking arena, I think the private sector banks are going to go on improving the market share much beyond most analyst expectations at the cost of public sector banks. As far as defenses goes, I have been a clear-cut advocate of the fact that one should remain invested in defenses, but somewhere I feel one should go and start nibbling at cyclicals. When I'm saying cyclicals, I think my favorite bets are Tata Motors, and somewhere I'm going to buy into a Larsen and Toubro, maybe at around 1400, 1450, if the market gives me an opportunity over there, because I personally feel as and when the investment cycle turns, which should happen over the next 1 to 3 quarters. I think L&T possibly is the only company in the capital goods and infrastructure space which has not shorted its balance sheet.
Perboon, but many analysts on the street are of the view that L&T FY14 guidance is rather optimistic. Q4 delivery was a concern, and after a poor quarter, L&T has indicated that for this financial year, when the environment is tough, CAPEX cycle is yet to pick up, they've guided for a 15-18% growth. which is slightly stretched.
Yeah, I agree on that. I think even a 15 to 20% growth which they are targeting as far as orders and flow go and other things go, I think could be a little bit optimistic. But at the end of it all, now we need to accept the fact that if you take over other businesses of L&T and look at the valuation at which the company is available, and honestly, Nikunj, I think 10 out of 10 people, if you go and ask as to, as and when the cycle turns, what are they going to go and buy, I think 10 out of 10 will go and say Larsen and Toubro, because as I mentioned earlier, the other names in the space have shortened the balance sheet to an extent to which possibly they're in a very bad shape, the balance sheets. So when you go and buy a name, possibly you go and look at only L&T in the market right now, and possibly something which I think attracts my attention despite numbers which were below expectations, numbers which are announced on Friday. The second name in this space which I would like to look at is maybe a Crompton Greaves. Other cyclical names which I like include Tata Motors, which I mentioned earlier, because I am trying to put an Excel sheet in front of me that even if China doesn't contribute much to Tata Motors, will it be impacted very badly? And I personally am possibly at crossroads with most analysts as far as my calculation on Tata Motors goes. I said despite China continuing to weaken as far as numbers go for Tata Motors, I don't see too much of damage happening to the company.
Mehrabun, what happens to SBI then? How do you go about approaching this one?
Well, I've been very negative on SBI for many quarters, and I think nothing has made me change my view. And as I mentioned earlier, Aisha, I think that if people want to invest in the banking sector, I think I have 100% positive bias only towards the private sector banks. And in that also trying to look out for names beyond an HDFC Bank, IndusInd Bank and HDFC, I think it doesn't make too much of a sense, because instead of putting a couple of lakh rupees each into 5 stocks, why did you go and put 3.5-4 lakh rupees each into each of the stocks? So why are you trying to look out for the 4th and 5th name? As far as PSU banks goes, SBI in particular, I think the problem of provisioning as far as assets goes is going to be a problem, because what we saw as far as the numbers go, numbers came down because provisioning going up. Is this an end to the problem as far as quality of assets goes for the public sector banks? My answer is no.
Let's dissect Kotak Bank or Kotak Mahindra Bank. A growing bank, but very expensive. It is trading at something like 5 times price to book, and the big concern for Kotak Mahindra Bank is they're losing market share in the securities business.
I think, Nikunj, this is one more bank which definitely attracts attention. As I mentioned earlier, complete bias for private sector banks, because I think somewhere the market is underestimating the fact that the market share of this private sector banks is going, according to me, going to exceed in most segments the expectations of the most ardent optimist. That's why I think one needs to continue to be very positive on private sector banks. Coming to Kotak Bank, yes, I personally feel the growth is brilliant, but valuation-wise, very expensive. Whether one should buy a Kotak Bank, well, it's a matter of choice. I think, as I mentioned earlier, my top 3 picks are HDFC Bank, IndusInd Bank, and HDFC, which, I'm including it in the banking sector, as far as my way of looking at things goes. But Kotak Bank is another name which is interesting, and maybe an ING Vaishya Bank. I think these 5 names are the most interesting in the private sector banks. But I personally feel that it's all the question of, instead of trying to buy into 5 or 6 different banks, why just don't go and pick up into 3 of them? And the 3 names which I mentioned, IndusInd Bank, HDFC and HDFC Bank, I am quite confident over the next 1 year, I think investors can safely assume a minimum 20% returns on these 3 stocks.
You not mention ICICI Bank, even though it's a private bank. You've not mentioned Axis Bank, even though it's a private bank. Any reason why you don't prefer ICICI Bank or Axis Bank?
I think they are high beta stocks, I think, and they were more of a trader's delight than for an investor to just go and buy into it without bothering anything happening to the stock price. So when I'm saying I'm going and buying it on HDFC Bank, despite the fact that a lot of people feel that the growth will not continue, I personally feel it's one of the best banks possibly in Asia, according to me. And I think valuation-wise also, I feel that it's going quite cheap, despite the fact that it will be ruling at its all-time high right now. So HDFC Bank, HDFC, IndusInd Bank. Now whether I buy a Kotak Bank or ING Vaishya would be the next choice. But as I mentioned, my restriction would be to only 3 banks. Coming to ICICI Bank and Axis Bank, they had their own share of controversies in the past. I personally feel a lot of steps are being taken by these 2 banks to improve upon or to try and answer the questions which most analysts have always. So yes, from a trading angle, I think ICICI Bank would be a preferred bet over Axis Bank. But buying for the next 1 year, I don't think it possibly comes into, it satisfies the parameters which I have in my mind.
Mehrabun, what about mid-caps? Is there anything that you like out of that pocket?
I think quite a few interesting names I have. I think in the paint sector, we like a name called AkzoNobel, which announced an 80 rupees dividend, including a 60 rupees special dividend. I think if you look at the performance of Asian Paints and Berger Paints, I think ExxonMobil is one stock which I think has not done too much over the last 6 months, relatively. So whether one buys into it despite the fact that the management is not sounding very positive as of now as far as the demand factor goes, but somewhere along the line, companies, MNCs with great balance sheets ultimately will end up giving good returns. Another name which I like, and I think Nikunj once mentioned last week in one of his shows, is Bayer Crop Science, which I feel with a solid balance sheet. I think this is a stock which one should be looking at. Among the bigger names, the more popular names, I think Biocon maybe at around 265, 270 is the only pharma stock which I'm now ready to look at, along with my all-time favorite Sun Pharma Advanced. Biocon I feel is one stock which is not going to be affected in any way by the DPCO. And I feel the DPCO which has come into play, I think is not going to be positive in any way for any pharma company. So Sun Pharma and Lupin remain my best bets. They are expensive for the moment. Nothing positive for them as far as the DPCO goes. Sun Pharma Advanced and maybe a Biocon in the mid-caps, possibly I would look at.
Is it time now to have a cautious approach towards pharma? Because of late news flow for at least the large pharma names has been poor. First it was Ranbaxy, then Sun Pharma and Taro, and then Wockhardt. So pharma as a group is overbought, but somehow the supporting news flow is missing.
Yeah, Nikunj, 100%. I personally have always liked Sun Pharma. I think it is my Sun Pharma is my first, second, and third top pick, and the fourth one being Lupin. I would put it that way. Besides these two names, I think I have not been positive on anything over the last 1 year. But looking at the valuation at which most pharma stocks are, and I think one big negative for pharma scripts in general is virtually every person on the street is positive on pharma. I think this DPCO announcement, according to me, the pricing order which has come into play, I think is a very big negative. And I personally feel some of my friends and among pharma analysts are underestimating the negative impact of the DPCO. I think some of the numbers coming from the names which are going to get very negatively impacted, I think people are just going to wonder as to what went wrong with the top line of some of these companies. Because when the pricing comes down, I think, and considering the fact that even today, India, most of these companies depend to a large extent on sales in India, I think it's going to have a very negative impact. Lupin and Sun Pharma, my favorites, are not going to be affected too much. But another negative which has happened, which could impact the market sentiment towards pharma scripts in the short run, is just what you mentioned, Nikunj, just what happened to Ranbaxy and now what is possibly happening to Wockhardt. I think all said and done, I think these are reasons why possibly pharma scripts could continue to react. So people will have to be very choosy if one wants to buy into pharma scripts for the simple reason that valuations have gone up. Whatever is happening on the pricing front is not going to be positive for the overall sector, while some companies will get away, but nothing positive is going to happen for them. So maybe on declines, I think Lupin and Sun Pharma will again be names to look at. But names which I think look interesting and which are not going to be affected by the pricing order or by the US FDA, what it has done to Ranbaxy and Wockhardt, could be, I personally feel, Biocon and maybe a Sun Pharma Advanced, which I personally would have rated it on your channel in the month of January as possibly the multi-bagger over the next 2 to 3 years.
Yeah, that was a good call. I remember that call. And in fact, the numbers for Spark or Sun Pharma Advanced Research for the quarter gone by, they were strong. But do you think, Mehboob, for those who plan to put money to Sun Pharma or in Sun Pharma Advanced Research, they're still buying the stock at a concept stage because there is still no visibility on what the company could do in the next 2 or 3 years?
Absolutely 100% right. I think if any question I have got is right now that the transparency, I think somewhere it's missing. I think while I was very positive on Sun Pharma Advanced, I think I always had to admit and continue to admit that I really don't know as to what type of numbers will come over the next 1 to 3, 4 quarters. The conviction is very strong. Dilip Shanghvi has performed, has delivered. Sun Pharma Advanced, somewhere something tells me that this stock could end up giving good returns. But what upsets me is the fact that how many of us had anticipated the numbers with the company announced. You have an analyst meet or a corporate or a conference call once a year or twice a year. Is that enough for analysts to make an estimate? And when you cannot make an estimate, how do you go and buy the stock? So I think Sun Pharma Advanced will continue to remain possibly favored only because of conviction and not because one can easily make an estimate to the earnings, which honestly are very, very difficult. You could have a very poor quarter coming or 1 or 2 more quarters. The numbers which you saw in this quarter may not get repeated for the next 2 to 3 quarters. So will the stock come down again? It can come down. The fact is, it's very difficult to estimate as to what happens to the numbers of Sun Pharma Advanced. And that is the only unfortunate part as far as this particular stock goes. So when you go and buy Sun Pharma Advanced at 120 or 150 or 160, you need to accept the fact that maybe I'll see lower levels if we have a blemish as far as numbers goes over the next 1 to 3 quarters. But over the next 1 to 3 years, this is the stock which could possibly give you a price of even 300, 400 or even a 500.
Mehboob, do you think the only way United Spirits could go in the short term is up?
I would like to say yes to it. I think I've been very positive on the stock for the last many years, even when the company was completely under the control of Dr. Vijay Mallya. I think the reason is that you need to value the brands the way they deserve to be valued. And if you look at possibly the fact that at least in quite a few of the segments in the liquor business, I think 70% of the brands come from United Spirits. Some of the segments I'm saying. So the valuation wise, I think people were always questioning it, and I was saying that one needs to value it in a very different way. Now with what has happened in the company over the last 6 months, yes, there are reasons to believe that the valuations could improve further. In the short run, whether it could be a one-way stock, I think, Nikunj, honestly, very difficult to say it. I think people were saying the same thing just a couple of months ago for a script like Wockhardt. And the script came down sharply by around 30-35% in a matter of a couple of days. I don't see any reason why United Spirits should react very negatively, but what I'm trying to state in this is that while I see the stock going to much higher levels over the longer term, I think the short-term traders, very difficult to say, but investors could possibly look at if the stock corrects 5, 7, 10% from here.
Mehrboon, I'm sure you must have heard this argument before, so let's revisit this argument that Indians are underinvested in equities, gold is down, real estate is not going anywhere, they will come back to equities. We've been discussing this, we've been arguing this from last 2 years, but the script is not playing on expected lines.
I think the only reason why I think there is still a passion for gold is honestly one really doesn't know as to where one is going over the longer term. I think that skepticism continues to be there in the minds of a large part of Indian investors. The reason is the stimulus across the world. Ultimately, what is going to happen to the currencies? Not many have a decent estimate to give over the next 1 to 2 years. That is point number one. Point number two is if you look at the fact that if there is a sharp devaluation of the currencies across the world, look at what had happened to Zimbabwe some years ago. If there is a sharp devaluation of the currency because the central banks feel that just going on pumping money is the final solution, it is not the solution. So as and when the tap gets closed, the money goes out, the sharp fall in assets, I think gold possibly could protect investors. That's the thinking of most investors. But as of now, if you ask me, I personally feel the backbone as far as gold goes is broken. I don't see gold going back to the level to which it was some months ago, at least for the next 1 to 2 years. As far as equities goes, I have been a man of equities all along. So I personally feel that if one goes and buys selectively into decent quality companies, I think there's much more money to be made than trying to make money into gold.